Good morning, everybody. I hope you're doing well. So here we are for roundtable number 33, Michelle. That's like a third of 100. We've done 33 roundtables. So this is number 33 of 5. We're going to do 5 roundtables. But anyway, listen, this is all about community and sharing. So do use the chat. This is produced by Qnity. We've also got some great sponsors. You got to hear from Aura. Sarah Cooper did an amazing job talking about technology. And then Vish, which I'm very pleased to say, not only is Vish a sponsor, but Josh is going to contribute today. We got Josh joining us again. I love the session we had with Josh back in September, and we got some new stuff. So we're going to get to hear from Josh today. Last week's guests were Nicole and Orlando Cumberlander about schools, about recruiting, and I got tons of great feedback on that session. And then this week we have returning Kate from ILOF, Heath Smith, who is a Qnity coach and also a co-owner of Ruiz. And Heath, I was surprised to say Heath has not been a guest on this yet because he's a guest on just about everything else we do. By being a member of really the Qnity team as a coach. And so anyway, we're glad to be able to bring Heath with us today, and then Josh Howard, who I already mentioned. So reminder, past recordings of this are in the Plan for Profits portal. If you need access to it, let Michelle know. You do need to be part of our Plan for Profit curriculum to access this. This is a body of work that can be packaged and should be packaged all in and of itself. It includes contributions by members of our Brain Trust, which I'll get to in a moment. From a scheduling standpoint, we've got the dates up on the screen here. We've also got some special guests joining us in upcoming weeks. One to let you know about is we're going to be inviting Robert and Mary Cromian. Will be joining us in a future week. Super excited about that. That is promises to talk about business with a very unique flair that always comes from Robert. So that'll be really fun to have a guest. They've become a Qnity client. We get to work with them, and they're amazing people. The Brain Trust. Michelle, we need to update this sheet. I said, Michelle, we're missing people on here. And she said, yes, we're missing people on here. So this Brain Trust keeps growing and growing and going. Look at this Brain Trust. What an impressive group of people. Many of them are on the call today. Heath, it looks like you're on. Maybe we did have you on, Heath. I don't know. All right. Now, let's see what else I got for you. The 9 grid, it should have been furnished to you in advance. You're able to keep notes on there for the call and take advantage of that. We want to hear from you. Now, before we get to Kate, and actually I'm going to stop the share here. For me today, all the heavy lifting is going to be done from our guests. I just get to sit back and drink ginger. So this is a shout out to one of my teammates who made me a ginger drink yesterday. When I told her, she said we need 1 thing of ginger. I said we need 3, and I'm on I love. Anybody else like ginger? It's a very random moment for today. We got some hand raises. So anyway, I'm going to be joining you. So if I'm high today, I'm high on ginger, but I'm high every week when we do this thing because I get to talk to people like you guys. So anyway, Kate, you're first, and so let us unmute you. And yeah, I know other people love ginger too, I guess. All right. So Kate, let's get you off the mute. How are you, Kate?
Tom. Good. How are you this morning?
I still remember one of your early contributions that stuck with me throughout the whole year. And it was really early on. I don't even know what week it was, but you brought up the subject of silver linings.
Yes.
And listen, silver linings is something we all heard about, but you and ILOF, you and Marilyn are the ones that really brought up silver linings. And at the time when we had you in the past, you had like 3 silver linings you shared with us. It was a cancellation policy. It was, what were they? And what were the things? This is probably taking us back to maybe this summer, right? What were your 3 silver linings? Because you have new stuff for us today.
We had an opportunity to really dig into our culture more as we were bringing people back into the salon, reinstating them. And then the other piece was a price increase that we did at the same time. So there were some other good linings too, but those are the ones that I talked about on this call.
So now here we are today, and we got an email from you contributing, and you have to be careful when you contribute to this community because it usually prompts an invite. And so that immediately followed an invite. So I thought what you had to share with some recent is really powerful and a really good thing that I think our group would like to listen to. And it really has to do with promotions and all of that. So I'm going to just turn it over to you. And by the way, so Kate, you're from Ilof in Oklahoma, 3 locations, long time 2 to 10 members, Qnity clients, great friends, you and Marilyn. So do you want to discuss your role real quick before we get into your share?
Sure. I've been with Ilof for 16 years, almost 17, and I started at the desk. I've moved into management. I've been doing a lot of the marketing, and now I'm the general manager over all the locations. So I spend time a little bit of everywhere and doing everything. In fact, I was desk coverage this morning at one of our locations. So a little this and that. I'm sure a lot of you can relate to that as well.
Perfect. Thanks for that. All right. So you're specifically you're dealing with, I'm going to give the short version of it.
Okay.
The short version is that, like many others, our stylists aren't back to their pre-COVID service totals.
Mm-hmm.
We rolled out a COVID exception in mid-November on promotion criteria that will be revisited in March. There's your cue. Take it away.
Okay, so in the fall, I think a lot of people really started realizing on our staff that, and us as well, that this isn't changing. This is who we are right now, and we need to start really leaning into growth. And so promotions became a big part of our conversation. Our team was really excited. Just so you know, our promotion criteria, we're a level-based salon, and they have to hit a certain service total. They have to have a certain percentage of pre-booking, and they have retail sales that are incorporated in that as well. And they have to hit 3 out of 4 weeks. So everybody was getting really on board. They wanted to hit their totals. We weren't really seeing that happen. It was still quiet in the salon. We started coaching to more social postings. We started contacting guests who haven't been in. Well, we'd been doing that. We were sending out videos. We just were doing an all-out effort to build their businesses, and we still weren't seeing any promotions. So we started doing a little further digging. A lot of people went part-time during COVID. We've had people who are part-time. We actually been allowing that for a while now. I've been very proud of our progressive ways of allowing part-time people to work in the salon. But we didn't change our promotion criteria for part-time people. So they were kind of dead in the water. There wasn't a lot of opportunity for growth. They just kind of hit their level and stopped. So we realized that that's something we needed to modify, particularly right now. So we took a COVID exception and are allowing our part-timers to prorate their days. We rolled it out, really proud of ourselves, and with almost immediately got kickback from our full-time staff saying, I might as well go part-time. I'm not hitting the services that I need to be hitting. That wasn't the energy we wanted to have around this at all. So we went back. Go ahead.
Hold there 1 second. Okay. All right. Let me just make some points of clarity here. So we got the part-time piece, we have promotion.
Yes.
So
Yes.
when you speak about a staff promotion, that's
Yes.
also code for price increase, right?
Yes. Oh, and
Okay.
I wanted to explain that too. So it's not a commission increase. It's just a price increase. It's a level up. It averages anywhere from $5 to $12, depending on chemicals, 5 to 15, depending on chemicals and cut and what all the service is being provided with that guest. So
this is then also not just something for the staff, but this also relates with revenue for the company.
Correct. So that was one reason we were like, yes, we should be prorating this promotion criteria for these part-time people. So it was kind of a no-brainer for us. When we heard back from our full-time staff, we realized we had made, we needed to look at things a little bit differently. We went back to the table and we started doing research on the services that each stylist was bringing in. And outside of probably our highest levels, most people were bringing in an average of what used to be a 4-day week. So we, after realizing that average, we decided to change our promotion criteria we needed to make it accessible. We needed people to grow. We needed them making more money. We needed to be making more money, and we needed people getting excited and feeling like they had growth. So we relaunched. We were very transparent and saying, yes, we made a mistake this first time. We needed to be inclusive for everybody. So we created the goals. If they were $1,000 for a 5-day work week, we dropped it to 800. So we do a 4-day work week for our staff. We didn't want to pick an arbitrary number. We wanted to be very specific. So we re-rolled it out, relaunched, and everybody's goals are based on an actual 4-day service week. We did this, the second one, about the second week in November, and keep in mind that they have to hit their goals 3 out of 4 weeks. We also dropped the pre-booking. I don't know about everybody else, but people are not. I'm sorry.
Let's hold there just for a minute, okay? Let's deal with the okay, so let's stay with the promotion just a little bit longer. So if I'm hearing you right, that feedback was the gift from your full-timers.
Yes.
All right, so feedback is a gift. It's a great rule of thumb. And so you were just going to do this for part-time, and then you realized, oh my gosh, you know, full-timer, you got immediate feedback, you know?
Yes.
So you had to then immediately regroup and relaunch it. Did I have you right?
Yes, and
Okay.
we had to be honest that we didn't make the right decision the first time, and that is sometimes a difficult thing to do. But the feedback was really important, and we did drop 5% on the pre-booking goal as well. That was kind of an across-the-board thing, particularly at one location that we were seeing less pre-booking. Our guests are hesitant, nervous, and they're just not pre-booking as much. So we did that as well. We were a little nervous about seeing less of an increase in pre-booking, but let me tell you our results. So as of January, second week in January, we had 15 promotions through both of our locations. And people are excited. We are having an increase of pre-booking. The location that was really low, we actually saw a 6% increase average for our pre-booking. So that actually pushed it up and changed the energy around that. And we've had, that impacted our service dollars, and it just really changed the morale in the salon too. We realized that we thought we were being open-minded and clear, and but we needed to bend some rules, and we needed to make some changes and make sure our team really felt supported. We're here for their growth, and if we're not listening to what they need and not making success achievable for them, then our path is wrong. We did say this is temporary. We're going to revisit it in March. We didn't want to just not have an end to it. That was really important as well. But it was really a big deal. And I'll tell you, for those of you who are wondering, yes, other staff started asking questions. Can we make exceptions for this, that, and the other? You know, you put a little bit in there and all of a sudden it's, well, can we do this and this and this? So if you are looking at your goals and wanting to make changes for that, even temporarily, you will get some questions around that. Some we said yes to, but most of them we said, here's an example. So another thing that happens is when our assisted stylists don't meet their required retail sales, they get a charge to help pay for their intern. So they wanted to take that away because they aren't hitting goals, they aren't growing, they aren't leveling up. So where is their exception? We reminded them that we actually aren't so when you have an intern, you have to hit a certain service criteria or you lose the intern. And we took that away when COVID came and we came back to work, and we've kept that away. So we reminded them that that has already been an exception for them. And we also said, we're not out here trying to charge people. We're not trying to take your money. This is a goal. This is an encouragement. It's an incentive. However, if you've had something happen and you really tried your hardest and you're an amazing employee, come talk to our HR assistant. So no, we didn't take that away, but we said, don't feel like it's a burden. It's a goal, something to achieve. So we did have some kickback, and we did have a lot of people talking, but honestly, I think that was healthy. I think we needed to hear what our team wants and what works for them. It was good because they felt like their voices were heard when they were giving us feedback. Very positive. We still have people trying to hit totals and working towards promotions right now. So I know we're not done with promotions. Another highlight I want to say is—
Hold on one sec. Hold on.
Yes.
Hold on. I want to make sure that I don't get too far behind you, okay? So first of all, before Kate goes any further, I'd love to see if there's any comments. Any comments from anybody? What do you like about the share? Any questions about the comments? So before we get to something else, let me just back up a little bit. So putting an end date to this is really smart. And I've seen that happen in an alternative environment where something was rolled out, but there wasn't real clear that this is temporary. And now we have, a salon that's sort of stuck with something they rolled out. It's not, it's a factor. All right. The other thing is, as it relates to the promotions, can we do a little bit of rough math on this? I'm trying to figure out what this initiative's worth. And, maybe what we can do is we can have you come back at the end. I know certain people on this call like the math, and there's so many things about your share here. It builds revenue. You said they're excited, they're passionate. It hits culture. So maybe you've already done a little of the math. You seem anxious that you got your calculator.
Well, I have I pulled that up just in case, because I know this is a data group. So I do have that pulled up. Are you asking about what their goals became, or were you asking about revenue increase?
Revenue increase, step back. These are owners. How much is this worth a year?
Oh, well, I figured out we were increasing an average of at least 2,000 in services a week between locations. So take it from there.
6 figures just from that location then?
Well, and yes, that's 2 locations, but that's the
Okay.
average, depending on how many. I was looking at just 15 clients, them seeing, obviously there's a lot of variables, but
so it's another 6-figure reason to be on this weekly call, everybody.
yes, it is. It is. And I think it's a retention piece as well. I think that because we don't necessarily let people just raise prices arbitrarily. It comes with a promotion, and they were just stuck. You can only do so many add-ons, and the people aren't there. They're scared. They're at home.
Yeah.
So,
all right, so you had something else you wanted to share. And by the way, we're getting some great comments. Your 2 to 10 colleague, Austin Randolph's up in Michigan. This is great. We were literally just talking about tweaking promotion structure the other day. So you have just helped Austin, Scott, and Mary, and that makes me happy. So, and I'm sure it makes them happy. Then you have—
go ahead. Sorry.
Ashley Russell.
It feels a little late, but
what's that?
I said it feels like it was a little late on the draw, but I don't think it is. I think that to change promotions, but we're still in this. We're still slow. We're still seeing the results of it. So it's not too late to take a look at it. Okay, sorry, Tom.
The insurance point was unclear. You pay their insurance based upon performance, but when performance, if they're not meeting quota, is it a chargeback? Do you understand that question? That's from Sam Bricata, by the way. Good morning, Sam. Great to have you as usual.
That was for the interns or the assistants. So we take care of the cost of the assistant, and there is a whole level system there of if their APT drops a certain amount, then there is a charge attached to that to pay for a portion of the intern. So it's not insurance, it's the interns. That would be intense to pull insurance.
Okay, gotcha.
Good question.
Clarifies that. You and Sue Aarons, also another regular on here. Good morning, Sue from Fort Collins, also 2 to 10 member, member Sue. They also have a level system, promotion criteria. You're welcome, Sam. On Sam, thanks you, Kate. So anyway, let's say you had one more thing and something else you wanted to share.
You had asked yesterday, Tom, do we change commission when they level up? And for those of you asking, no, that is not a part of this. However, we do have sliding scale commission. So when they hit a certain level of service totals, they increase I don't want to get into the whole math of that, but this also allows them to increase their commission, not necessarily giving that to them, but it helps on that level. And then just another side piece is we had staff who'd probably been on a level for 7 years who work like 2 days a week or 3 days a week. Great employees, just there. I'm sure all of us have those, but they couldn't do more. And so seeing them grow and their enthusiasm, even engaging more in social media, just because there was hope, I feel like it gave to a lot of our staff. So if you are thinking about looking at it, I would definitely encourage it and maybe get some feedback from your staff. I think that was a miss not doing that the first time around.
Okay, excellent. All right, so great share. I know we could get more shares from you. I think we need to re-award you the $1 million light bulb. We might have to make this a $2 million light bulb.
I like that.
That's a good question. So if you come back as a guest, then it's not just $1 million, it's $2 million. All right, so we owe you a $2 million roundtable or light bulb.
Good.
All right, well, thank you. Let's give her a virtual applause. Comments, she's promoted, as he said. Yes, she is promoted.
Thanks,
yes.
Heath.
All right, Kate, we always love to collaborate with you. You're always a 2 to 10 conversation starter, and we love you in Maryland. Hi, Maryland. I see she's on the call, so great. All right.
Thank you.
Heath, good morning. How are you? Austin, Texas, Ruiz, 2 locations. Outstanding company as it relates to creativity and business. A yin yang in the business. You and your partner, Alan, do amazing stuff. You've also, we've collaborated on so much stuff throughout the years, Heath. It's always wonderful. And we were on a call yesterday with our coaches, and you dropped a couple nuggets out there. And at the end of the call, we said, hey, Heath, will you join us tomorrow? And it really, really relates to, listen, you're not an accountant, you're not a finance person, but you're a business owner like most everybody else on here, dealing with the opportunities as it relates to government relief. All right. And so let's have you share just some of your insights as it relates to that.
Yeah. Tom, how far do you want me to go back? It's a big conversation.
I would take it as recent and contemporary as possible. Use a time frame, not, maybe PPP round 2 and like now, more focused on now.
All right. Well, I'll throw one phrase out. The conversation is just around the recent reintroduction of the employee retention credit. They're calling it the ERC. And for those of you guys that were following this was in the CARES Act that was passed in April last year. But it was an either or. You either took the PPP loan or you took the employer payroll tax credit. And at the end of December, I think it was the 25th, 27th, 30th, somewhere in there, when Congress passed and the president signed the updated relief bill, it allowed for businesses like us to have both options. So we could have the PPP and we could have our ERC and eat it too. So it was cool. It was a really cool change. And my accountant that's been with me since we've opened started this kind of whispering in my ear in the second week of December, and he said, which he's always been right, just not with the timing, but he said, legislation's coming and they're going to allow this employee retention credit in addition to PPP, and we need to be pulling our payroll reports. And so we started that process back in December, getting him the information just so he could kind of just do an audit, an assessment. And he said, Heath, there's going to be money there for you. And I said, listen, as long as I can pay you for the work that you're doing and I get something back, it's more than I have now. So let's take a look at it. And so it's a really complicated formula. It's more tricky than the PPP application. So as simply as I can put it is there are triggers that you can qualify quarter by quarter. And if you qualify, then you have access to an employer tax credit. And When you look at that across third quarter and fourth quarter of 2020, I know for my business, when they finished my audit, and they're still working on one of my locations for Q4 of 2020, we were already somewhere in the vicinity of $240,000 of tax credit that would be owed back to us. And so we're wrapping up Q4, and then the end of December, that relief bill included access to this credit again for 2021 for the first two quarters, so Q1 and Q2. So the big conversation that we were having yesterday is really about the nuance and like how you play around with maximizing this money and access to this money. And I would just say for everyone there, all of the coaching accounts that I work with, I really start the conversation with a focus on, are you maximizing PPP? How are you doing that? And then are you pursuing this ERC? Because for me, that's going to be quite substantial. They expect it to be somewhere between $300,000 and $400,000 by the time we're done with Q2 of 2021. So it's just money sitting there that's available to us. So it's kind of worth pursuing it.
I love money that's just like sitting with us. I like that kind of money. And Josh, the pressure's on because Kate's throwing out like 100,000 here. He's throwing out 300,000 here. So Josh, you better be ready. You're going to have to pile on the hundreds of thousands here with your ideas, just put a little pressure on you. But anyway, Heath, I digress, and let me have a little ginger to it. Cheers for what you're talking about here. Please continue.
Yeah. So, the interesting thing for me is that there's still a limitation. You can't pay payroll with a PPP dollars and try and get the employer credit all in that same payroll. However, you can play around with maybe, I think the percentage that must be spent from any PPP funds is 60% on payroll. So you could, if you wanted to, for the next, these are the crazy ideas I have, the next 10 payrolls, pay 60% of my payroll dollars from PPP funds. And then, as I understand it, the 40% that's left over would still be eligible to apply for this credit. So you got to speak to your accounting team. I will tell you, it's pretty laborious. And if you haven't, just last week, I had 2 accounting firms reach out to me that just said, hey, let me get you this free money. So the predators are kind of starting to swim around businesses, especially industries like ours that have really high payroll dollars that run through it. We have the most to gain because it is a correlation to payroll dollars. So it's worth the time. And my experience so far has been the accountants will, yes, charge you by the hour if that's how you set it up. But I would encourage you to kind of set a contract rate for the project and come up with a lump sum. So just ask yourself, this is what my question was at the end of December. If I stand to get minimally $240,000 back, what am I willing to spend for someone to just do that for me? Think about that. So I set a contract rate and then a percentage of savings for Q1 and 2 in 2021.
Excellent. Let me, a couple call outs here. And one of the things that I do want to set in terms of boundaries, in terms of the roundtable, one of the things that we do ask is that you don't reach out directly to our Brain Trust members because they're busy people and they are here with us today. And so any questions for Kate, for Heath, for Josh, run them through us, just so we're a little protective on that. The other thing I wanted to mention is we did have a great guest on here at the beginning of January, John Pitzel. And I'm pretty reluctant to make recommendations for accounting professionals, but this guy's good. I like this guy a lot. And he's working with some of our accounts and he does have that right balance of quality and fees. So this is a little bit of a shout out to John, who, by the way, I'm talking to at 12:30 to go through a lot of this stuff right now with some other clients. So if you do need a good resource, someone that is a CPA, specializes in tax, He's doing a lot of work in this area. He doesn't gouge you in fees. He works with salons. Let us know. So Heath, back to you.
No, it's great. I think if I were, well, let's just say this, if I had an accounting firm or a professional come up and pitch this to me and I didn't have a high trust level, I'd be very, very wary. I probably wouldn't pursue it because there's money up front that they want you to invest, and then they'll pay you you pay them the second half on the completion of that project when you get a check. And I did fail to mention that for 2020 especially, there's an amendment form that they'll file on your behalf, and whatever that dollar amount is, that's being requested back from the government. So you would get a check, a big fat check, for what you had already paid in employer taxes for 2020. So that's kind of how it works. So structure the agreement with your professional however you want. I just chose to give him a lump sum, half of it up front, and then the second half, I told him I would pay him when we got the check. So
Who likes big fat checks? Anybody like big fat checks? I like big fat checks. Josh, do you like big fat checks? Josh likes them too. Everybody likes big fat checks. Heath, thank you. I guess I show that you already were a guest on the roundtable. So therefore you might also have to be promoted to get a $2 million roundtable. So anyway, thank you for your share. We get to work with Heath all the time. Heath, thanks for sharing. Before you are done, come back off mute just for a moment, because as I introduce Vish, so Josh, you're next, and let me sort of set up this introduction, okay? So yesterday, Vish came up like 3 times, and I was already scheduled with Josh, and I thought, all right, I'm just going to invite the guy to be on the roundtable. It's just like this karma thing; it keeps coming up. Heath, you said something about Vish that was really interesting, and listen, in the interest of full disclosure, Vish is a sponsor on this roundtable, but Josh is here because he's providing hugely relevant content and a tool. So if this sounds a little bit promotional, so what? The reality is it works. So what you said, Heath, is that you said that Vish is the Goliath in raising average ticket.
Yeah.
And so describe what you mean by that.
Well, let me back up. If we look at any innovations in our industry, the beauty industry, there hasn't been a lot in the last few decades. Every one of them mostly will fall under technology. And the most recent one is real-time management of product usage and waste that gives you that kind of transparency to make better decisions. From the Qnity environment, we look at 2-number growth. It's number of clients coming through the business, and then what are you charging them? What can you have them pay? So average ticket value. And there's not another tool that we use that takes the burden of the manual work off of us like a system like Vish. They allow real-time tracking for the department, for the company, and then on an individual basis, you can see every chemical service, what is used per transaction. And it just gives you that information that you can go granular and coach employee by employee on the service mixes that they're actually performing, and then where their opportunity lies with things like add-ons and charging for additional product used. They've got a really good loop back to the business side of what we do that gives us that transparency to coach our colorists.
Excellent.
So yeah, absolutely. I think there's not another tool out there that lets us or gives us the information that we could drive average ticket like that tool.
Perfect. Heath, thank you for that.
Sure.
Josh, come off mute. How are you this morning?
Good. How are you guys this morning? Thank you, Heath, for that.
So
I don't really have much to add now.
yeah, your job's done now. So we pretty much know you have some really good data and really good information. We chatted for a while yesterday, but before we go any further, so tell us a little bit. So you're up in Canada, so we do have another Canadian joining us. We do like to make sure that these roundtables are international and global. So thank you for contributing to that vision. You're up in Toronto, and Vish, it sounds like, so you were on here in September, and we had you and Tim, who's your brother and partner. and you guys did a great share. And we talked yesterday, you started to throw out some data at me, and and it sounds like you guys are growing really, really fast for many reasons. You talked about something as it related to hair color and hair color growth. Did you say up 35 to 40%?
Yeah, we're typically seeing a 30 to 40% increase in product use per service across the industry, well, across our data set, which is, over 500 salons at this point. And it's for a couple of reasons. One, we've had a lot of lockdowns. We have a lot of customers and we have a lot of clients in Canada, and we have a lot in the UK, which have been hit harder than the United States for lockdowns. And when the guests return, they're coming back with extended regrowth. They're coming back to color corrections, and some people are just stretching out. Even if the salons are open, they're stretching at a budget, and they're coming back at 8-week intervals versus 6 weeks intervals. And then that's also there's also just the problems of the industry that a lot of salon owners try to run their business based on their total service sales and their professional product cost. It gives zero insight to see where you're making good profit and where you're not making good profit. So, I probably mentioned this back in September, but one of the biggest, I guess, aha moments I had when I started working with my brother was looking at the data, and I was like, why do they only make money on highlighting services? And why are they giving away toners? Why are toners $25? They're the most that they use the most product for toners. Why are they paying commission on toners? And it ends up being, it's a high volume business. The average stylist does about 50 color services per month. So you don't need to lift that average ticket by very much to make a huge impact. So it's really understanding your salon as well. We see a wide variety across salons of how much product is being used per service, but we also see a big variety in the salon of how much product is being used per service. So we typically see owners that are behind the chair or senior management, senior stylists that will use probably $4 to $6 per application. And then you have junior stylists or just people that it might even be their style. They might not be wasteful. They may just use more product. They might use more vibrance, more fashion colors in their services, and they're upwards of $12 to $15 per application. So before you have this insight, you're looking at it as like, well, we're $8 per application relative to our service sales. We're good. The only thing we can do to make more money is increase all our service prices. So what we really do is we get granular with the data, and we review the data with you, and we show you, okay, here's your strengths, here's the places that you're not doing so well on, and then we set thresholds up to ensure that if that client comes in and requires an extra 20, 30, 40 grams of color, that the front desk is notified, and then you can charge for that increased cost.
Yeah, I think this is huge. I mentioned to you, Josh, that ironically, right after I was on the phone with you, I was on the phone with another client, and the subject had nothing to do with Vish. I'm helping him with some restructuring and that kind of stuff, 4 locations. And he said to me, I just thought this was so ironic. And it also gave me sort of a reality of what this looks like in an actual business, which I think everybody wants to know. He said, hey, have you heard of Vish before? And I said, well, yeah, I just hung up with, the CEO. Thank you very much. Yes. And he started going through exactly what he's doing, and they made a change. And you know who I'm talking about. We're not going to mention the name of who it is. They've got 4 locations. And he said what they do is mark up. What they basically do is they break the invoice down into 2. There's essentially labor and parts. So cost of the service and the cost of the color. And what he's doing is he's basically taking the cost of the color and marketing up 50%. And so there's basically 2 invoices, and he was giddy about it. So, I'd really like to understand your model a little bit more and how this all works.
Yeah, so with that, I know exactly what you're speaking about, and it's a process. And even with Heath Salon, it's a process. It's not about coming in, putting our technology in, and like, by the way, change your pricing. It's about collecting data, seeing what's going on, and then modifying our system to fit your culture. So with this particular salon, they were charging $3 for chemical services on color and cuts.
But
so they were
charging staff?
No, they added on to their ticket.
Okay.
$3 for colors and $3 for cuts. So I said, well, why are you charging a chemical fee for your cuts? And your cost per application is $12. So you're taking half of the money back. Said, why don't you get rid of that? So your haircuts are going to come down in price. And then just add the product fee of what that customer actually used to the ticket. And, it worked out incredibly well to separate that parts and labor. And that's essentially what we did there. He did a 50% markup. Some salons are doing 100% markup, but some salons don't want that variability. So what they do is they build threshold in. You're allowed to use 40 grams of color for a new growth application. And then when you go over, there's a product fee. So what you can have is stylists that don't want to see that product fee as they focus on being more efficient. So there's a number of different ways of doing it. And it's truly about understanding your culture, but we are a data company. So what we do is I guess the number one important thing is the client experience. So like we started off about recording hair color formulas to make sure they were exact and eliminate waste. Just starting there and then understanding your business and then taking the data and deciding what you want to do with it. This particular salon, they separated parts and labor because they already had a fee on the ticket. Now they made it more precise. There's a lot of salons that are charging their staff for the product that they use or taking that off the top. And it all comes from like just no control of their inventory. So that's something we're actively trying in the industry to eliminate, is to stop charging your staff for the product they're using and shift it to the people that are actually consuming, and that's the client.
Okay, so basically what we're hearing from you is this is a major opportunity for revenue growth, correct?
Cost savings and revenue growth. It's two tiers.
Well, that's where that was my segue into it. So now let's look at the cost savings part of it. So if I'm literally looking at a P&L, so far your share to this point has been revenue enhancement, and a fresh way to look at revenue. Tanya Jones had put something on here, and one of the reasons we decided to partner with you is because you also do address the cost factor. You address it head on. What did she say? Increased service ticket. Tanya, good morning, Tanya. Raised their service ticket by 12% and decreased our waste by 40%. All right, so here is the magic of both of these working together. So let's deal with the waste and the cost side next.
So we started this off, we did some preliminary research. We estimated it was about 20% to your hair color ends up unaccounted for, whether it goes down the drain or it's being mixed and not charged for. 20% is not being applied to the guest. It actually is closer to 25 to 40%. There's a bit of a range there. Bleaching powder, people waste upwards of 40, 50% of that comes in just because people mix it like it's pancake batter and they just keep playing with it for consistency. But we end up seeing a 25 to 40% of your inventory is not being accounted for. So some salons, all salons that we work with really focus on getting that product usage down and just eliminating waste, because it's also an environmental story, of course. So we can do a decrease of your inventory purchases by about 25, 40%. Everybody can do the math on what they spend in their professional product a year and reduce it there. And then we increase your color service revenue by about 5 to 15%. And so those are the two things that we can do, but not every salon does everything. So some salons really dial in on efficiency, and our most efficient salons are down. I know Heath's down around less than $5 per application. We've seen it as low as $3 per application. And we have other salons, because they do a lot of unicorn colors, fashion colors, like a lot of vibrance, where they've actually used it and they've put it in the commission structure of the stylist. Now they've done more than 100% markup because they got to take into account the product cost and then the commission. And the staff actually use way more color than they used before, because now it's a way to recommend different services or accents and stuff to their client, and then they can bump that cost. So it's interesting to see. And most of our salons live in the middle. The most normal and the thing I would recommend is having a threshold, like get your waste down, and you don't have to talk about waste, that we call it reweigh. So reweighing your bowl at the end of your session, it will augment. So get your product control, get your product consumption down. And then if someone is using more than they should be using, charge for that. So setting those thresholds up, because separating parts and labor is something new and is something that people are doing. But for me, like what Vish is about is consistency. So I wouldn't want to be throwing a different price at my client every time they come in, right? You want to make sure that like if a new growth is $60, it's understood that there's product with the new growth. It's the same thing when you go to a restaurant or bar, right? You can order a 6-ounce glass of wine, but if you go for that 9-ounce, or if you go for that top shelf whiskey, it's going to be more expensive. And that is another, I guess, don't want to segue too much, but that's another emerging thing that we're seeing in our data set is a lot of people are using high lift products now for balayage and different services versus using bleaching powder. And they're about 3 to 4 times as expensive as bleaching powder. So it's important that the stylist understand that if they want to grab more expensive products off the shelf, that's okay. But they need to know that it costs a lot more money and the guests are going to pay. But we're not talking about massive product charges either. You're talking anywhere from like $3 to $10 per ticket. And then that ends up being thousands of dollars a month just by the sheer volume of color services in salons.
Yeah, this is really a great share. And, these are tangible things that people joining us can bring back to their business. Now, Josh, one of the things that I knew going into the fourth quarter, like October, November, December, is that great idea, great technology, no brainer and all that kind of stuff. But sometimes it becomes a bandwidth thing, that leaders only have so much ATM, attention, time, and money. And it wasn't even the money thing, because this isn't a huge investment. It was really the attention and time. And to throw one more thing at the staff, and then also all the volatility, California's still closed. So part of it was it's the end of the year, but I think, Josh, you're going to see a lot more people as they look at their model going forward. Now we have, the new normal becomes the old normal, new normal converges. And we're hearing salons like Ilof making very substantial changes to their business, all positive ones. So I think we see a market that's more willing to innovate and to create technology, because here's the deal. This does affect client communication, staff communication, and it is a new behavior for staff. And I think the new behavior for the staff is something, it's training and all that. So talk to us a little bit about the barriers to getting going on something like this.
Yeah, so a lot of people haven't heard of us or are just starting to hear about us more now. We focused a lot of our time and effort on the usability of our technology. So we didn't spend a lot of time on marketing or really pushing it out there until we really had a product that was ready. Heath has been through the ringer. He's seen the challenges with the UX and the different usability components in the salon. That is our focal point, is that it's easy to use now. And we integrate with most major POS companies, because that was another friction point as well. With respect to rolling it out in your salon, the way I look, in very few industries, especially of this size, operate without insight into their inventory. So you can wait for sure, but it's easy money. It's really easy money for us to catch. We do the onboarding for you. We have hair color. We have our lead hair color educator was behind the chair for 20 years. We're not a traditional tech company, so we're not throwing you videos and manuals and getting you to figure it out. We do a lot of our training like this through Zoom and make sure you fully understand it. So it's more about, as a salon owner, deciding okay, we're going to address this problem, but because change is scary, we've tried to remove as many barriers as possible. So we don't have contracts. We basically eroded all of our upfront costs. We take care of most of the hardware costs for you because the scales are quite expensive. And we have a money back guarantee, which is super cheesy. I even hate saying money back guarantee, but the reason why we did that, because we used to do free trials with certain people and it sat on the shelf. We need investment of commitment from the owners and the management that no, we're going to do this. And there's an onboarding path that we map out for you. And if you give us a month of commitment, and it's not long meetings, we're talking we train your front desk staff in one session, and then we pair up our color trainer with your stylist and we'll train them. But if you can get buy-in over 30 days, 25% of your inventory back in your pocket, and then a 5 to 15% increase in revenue, like, you know, we've mixed over about $20 million worth of color now. Like, these aren't arbitrary numbers. We've got these dialed in pretty well. So, you know, it just needs to happen. Like, every salon needs our technology.
So
Not that I'm biased or anything.
Not that you're biased. Well, there's a lot of things that attracted us to, we're very, very selective in who we partner with. Aaron will all attest to that. And for us to partner with someone, it means that they have integrity, they have a great business model, it's a unique point of difference, they're good people, we like working with them, and it works, you know. And the other thing is, when someone has something to sell, you have something to sell, we make sure that your share is educational. So thank you for making an educational share. There's quite a bit of chat going on there. We might have you maybe respond directly to some of those chat. There's some really great questions by very important members of our community, including Kip. Good morning, Kip. Tanya's got some things to add. Sue Aarons, Ashley. So there's some really good stuff going on in the chat about Vish. And rather than me go through it out loud, everybody could read it. Damn, I'm going to have to give you a $2 million roundtable too. Michelle, we're going to have to go back to the bank here, because we spent $6 million of our budget with the three of you as a repeat guest. So anyway, Josh, thanks again for your share today. Let's give you a virtual round of applause. I think you'll be hearing about some other collaboration we'll be doing with Josh and his team. So really great share. Great shares by all of you guys today. Thank you. Josh, I didn't mean to allow you not to have a final word. So you can say your goodbyes, or you can say something. I kind of jumped right in there. So.
Yeah, I mean, the biggest thing I would say is that, you know, hair color, professional product costs, you all know, is the biggest variable spend in your salon. It is the black hole where you're losing money. We have a really cool solution. And as a company, like, we just went through a round of financing. So we're doubling our engineering team. We have a new stylist app coming out this year and a lot of integration. So we do a lot of cool stuff already. But the next 12 to 24 months, we're looking at intelligent inventory management. So predictive inventory ordering, we're looking at a stylist app and a lot of different things that are in the future. So while we do a lot of awesome stuff now, there's a lot more exciting things to come.
Intelligent inventory, you know, it almost an acronym, what oxymoron, in the sense that for years I've seen inventory as the biggest black hole, not only in the P&L, but also the balance sheet. And it's one thing to even get retail inventory under control. Good luck with back bar and professional. And this is a conversation that's been had so many different times, and I'm glad that you're really helping to lead the charge for that, because as you say, it's a really big black hole. So Josh, thank you for joining us today. And great share. Oh, for all of you, if you're interested in Vish, put something, you can reach out to Michelle. Tell Josh you're affiliated with Qnity or the Roundtable, and maybe he's got some special offers for you guys. That's between you guys, but I know that he's going to take care of, but just say Financial Roundtable, whatever. And I put you on the spot there, Josh. So, all right. Now, who the heck's on the call today? We, as usual, have some of our favorite people, starting with Amanda Hare. Amanda, you're always the first name that shows up on my link here, so I get to give you the very first welcome. April from our team. Good morning, April. Good to have you join us. Hello, Ashley. Russell, thank you for your comments. Austin, good morning. We've already given you a little bit of a shout out. Hi, Connie. Danny, nice to see you today from Colorado Springs. Donna. Josh, by the way, we also had a conversation yesterday about schools, and we do have a school client on here. So Donna, perhaps you picked up something on that. Jan, good morning. Joe and Karen Deanda, we were just talking about you yesterday. How are you? Kelly, good morning. Kip, I saw your shares, great shares as usual. We'll be talking to you very soon. Louisa, where are you, Louisa? Are you in Italy? Or are you in New Hampshire? You just have to tell me. I think you're at home. Marilyn, Kate did a great job as usual. Mark Gonzalez Pardo, always love to see you with us. Mary Randolph, Melissa, hello, Philip Gould. Good morning, Quinn. Hello, Rebecca. Sam Bricado, thank you for always being on these and sharing. Sam, you always have great insights. Also Sam Johnston, Sheriff from Oregon. Sherry Roper, good morning, Sherry. Sue Aarons, hello, good morning. Terry McKee is with us. That'd be Terry McKee. I have been guilty of mispronunciation for Terry's last name, and shame on me. Tanya, good morning. Trent and Victoria. Anthony, good morning, Victoria. I didn't see you on here. So, all right, you guys, I think we have another episode in the books. Is that, we've never really looked at it that way. These are, I guess these are episodes. All right. So this is episode number 33, closing off for you today. Thanks for joining us. It has been a great share. Next week, not sure who our guests are, but we're gonna really start to see more amazing people join us, like Josh, Kate, and Heath did today. So thanks to all you guys. Michelle, thanks for getting all this organized. Until next week, you guys, hope's great, but hope with action. And these guys are all about taking action. Thank you. Goodbye.